and welcome. On the 29th of June, the Monetary Policy Dialogue brought together leading voices in monetary policy and central banking. On the sidelines of the forum, we sat down with some of its speakers for a series of exclusive interviews, and we are delighted to share those conversations with you now. Hello everyone, and thank you for joining us. Today, I am delighted to welcome our special guest, Professor Michael McMahon. Professor Michael McMahon is a Professor of the Economics at the University of Oxford, Senior Research Fellow at St. Hugh's College and CPR Fellow. He also was a Director of the CPR Research Policy Network on Central Bank Communication. His work focuses on macroeconomics, monetary policy, central bank communication, and applied econometrics. He previously worked for many years at the Bank of England and served on the Irish Fiscal Authority Council, including Deputy Chair and Acting Chair. Professor Michael McMahon, welcome to the Central Bank of Uzbekistan. It's a pleasure to have you with us. So, central bank communication has changed significantly over the last decades. It's no longer only about explaining the decision after they are made. Today, the communication is a part of monetary policy itself. It shapes expectations, supports and helps the public understand why policy decision matters. So, my first question is, you have worked both inside institutions and academia. From your perspective, when did central bank communications become not just supporting activity, but an essential part of monetary policy itself?
Yeah, I think it's a good question. I would personally trace the first revolution in central bank communication back to the late 1980s, and I think we have to acknowledge the Reserve Bank of New Zealand as the pioneers of inflation targeting, because they were the ones, and it was the inflation targeting framework that really made communication a central part. This is probably something that loses its power as years go by, but I think of the 1994 as an interesting time, because that was the time when the Federal Reserve, arguably the most important central bank in the world, that was when they first started even announcing their policy decision. Now, the addition of more speeches, the addition of bigger statements, the addition of more transparency has sort of followed from that. But I do trace it back to inflation targeting as the kind of key driver of communication being a central part of policy.
So if communication is now part of the policy toolkit, as we talked earlier, the next challenge is making complex economic concepts clear for wider audience. So my question is, there are economic terms such as core inflation, real interest rate, inflation expectation, monetary policy transmission are essential for policy but difficult for many people to comprehend. How can central bank explain this concept in the simple words?
Okay. So for that, I sort of mentioned in the first answer the first revolution. And the first revolution was really about talking to markets, making clear to financial markets what the decision was and why you made it. The second revolution that you're alluding to is trying to talk to the wider audience. Now, that's much more recent. I think that's occurred really in the last 10 years even. After the financial crisis, trust in central banks dropped a lot. So it became necessary then for central banks to try to talk to this wider audience. And that, as you alluded to, is difficult because they don't speak the same technical language. So I've been working on this topic now for 10 years, so almost since the start. And I think we've learned a lot about how you make it better. But specifically on things like talking about the real interest rate, the key message is don't. These are concepts which, as you say, matter a lot to us. They matter a lot to people who study in graduate school and learn about the complex models that we study. But to most people, they mean nothing. And so the question is not how you should explain those terms. I think the answer is don't use these difficult concepts. I'll give you one very specific example. A lot of people, when they did focus groups in the UK, so by the Bank of England, a lot of people didn't properly understand even things like GDP or output or inflation. And inflation is very central, so they didn't quite get it perfectly. But the two terms that are linked to those, but that they do get, are terms like jobs and prices. So now, jobs and prices are not exactly the same as GDP and inflation, but they're close. And this highlights for me what I think the challenge for policymakers is. The challenge is a trade-off between accessible, that people can all understand. It's not just about using simple language, it's really about the concepts. And that sort of comes out of some of my own research that I've done with Matthew Naylor at the Bank of England. So I think that's an important message.
Thank you for such insightful answer. So communication is also important when the outlook changes. Forecasts are useful, but they are never perfect, especially during the shocks. Forecasts are central to monetary policy, but forecasts can change as new information appears. So central banks are always operating under the uncertainty condition. How should central banks communicate forecast revision or forecast errors in the way that protects credibility rather than weakens it?
Yeah, I think that's a good question. I think it's a harder question actually than the last one. The challenge here is that if you do a forecast from a technical point of view, you are making what we would call a conditional prediction. So you are saying, based on these assumptions for oil prices, for the dollar exchange rate, for government policy, this is what we think the economy will look like. But we know that those things will change. And so as soon as they change, the forecast is no longer the appropriate one. So the difficult task is, how do you make people understand that what you gave was a forecast based on a set of assumptions, and that when the assumptions change, the forecast will change? I think one way we can try to do that is by communicating uncertainty. And that's a big issue with lots of central banks right now. The question is, how do you communicate it? Do you use pictures? Do you use words? Do you use, as was popular in a number of inflation targeting central banks, these fan charts where you have a central case and then a sort of distribution around them? My own research on this suggests that fan charts are actually quite a good way to do it.
Thank you. So for an emerging market, central banks such as Uzbekistan's, what would be 3 most important communications priorities over the next, for instance, 5 years?
Credibility, credibility, and credibility. It really is. It's as simple as that. We know from lots of studies, and actually the sort of experience of countries coming after the COVID pandemic is interesting here. In countries where they already have a lot of credibility, they were able to manage the inflation fighting in a less aggressive way. They didn't have to raise interest rates as quickly with as much pain for their citizens.
Huge thanks for you to come to our monetary policy dialogue. Thank you for this lovely conversation. It was nice to see you.
Thank you for having me.
Thank you. Thank you.
Thank you.